Hi, and welcome to Campus Mortgage. Today, we will be discussing part 3 of a 3-part video series which will cover Freddie Mac updates to rental income, investment property management experience, and maximum eligible amount of net rental income. This applied to mortgages with settlement dates prior to March 1st, 2019. The borrower must have a minimum 1-year history of investment property management experience occurring within the most recent 36 months. The management experience must be documented with at least the most recent year of complete federal income tax returns for which the investment property was in service, or the net rental income may only be considered in an amount up to 30% of the sum of the net rental income and all other stable monthly income. For example, employment earnings, that is used to qualify the borrower for the mortgage. If there are multiple properties that are subject to the 30% requirement, for example, a subject property purchase transaction and a non-subject investment property purchased in the current calendar year, the 30% requirement applies to the combined total of net rental income. Now, effective for mortgages with settlement dates on and after March 1st, 2019, the following changes have been implemented by Freddie Mac. The requirement that the net rental income considered for qualification must not exceed 30% of the borrower's monthly qualifying income unless the borrower has a minimum of 1-year rental management experience has been removed. So Freddie Mac is not restricting the monthly qualifying income if the borrower is lacking rental management experience. Here's an example of how that would impact using the full amount allowed for rental income. So for the full net rental income allowed, let's say they had employment earnings of $6,000 and they had net rental income of $2,300. The sum of those two together is $8,300, and you take 30% of that, that's $2,640. That meant the maximum amount of eligible net rental income is $2,300, which is the full net rental income. Now you look at the full net rental income not allowed. If they had employment earnings of $3,000 and net rental income of $3,150, the sum is $6,150 times 30% would be $1,845. So the maximum amount of eligible net rental income is $1,845 and not the actual net rental income they collect of $3,150. So this resulted in the borrower unable to include $1,305 in eligible net rental income. So the change that Freddie Mac has made is really beneficial to the borrower. Added requirements to Freddie Mac rental income. The borrower must own a primary residence to use rental income to qualify when purchasing a new rental property. When I underwrite and see that a borrower does not own a primary residence but acquiring rental property, that's a red flag for me, that they could be building a portfolio of investment properties. I question if they are purchasing additional rentals after settling the subject loan that could impact their ability to repay, and that there could possibly be a lack of rental management experience. I question, do they have reserves for unforeseen events? There's just things that as you're underwriting a borrower, you want to question certain things. And if you find the need to get answers to those questions, it's always a best practice to do that. They're purchasing a new rental property or converting a primary residence to a rental property. If the borrower does not have a minimum of 1-year investment property management experience, the rental income can only offset the principal, interest, taxes, and insurance, also known as the PITI or PITI, of the rental property. And rental income exceeding the PITI cannot be added to the borrower's gross monthly income to qualify. And last but not least, Freddie Mac will require only the borrower's most recent federal income tax return in lieu of the most recent 2 years federal income tax returns. Rental income must be annualized unless the mortgage file documents that the property was renovated or purchased late in the prior calendar year. If they renovated the property or purchased it anytime during the year, the tax returns would not show accurate calculation for rental income or expenses. So sometimes you have to request the lease to get proper calculations. And last but not least, please take a moment to read our disclaimer. As always, the information contained in this video is time sensitive and subject to change without notice. For more tips, videos, and for a full list of courses offered by Campus Mortgage, please visit our website at www.campusmortgage.org. Thank you and make it a great day.